Hello students, we'll solve one more problem on final accounts of sole trader. This is video number 10, problem number 11. So trial balance of Sri Karunakara is given. With the help of that you have to prepare a trading and profit and loss account as on for the year ended 31st March 2020 and a balance sheet as on that date. So trial balance is given, followed by that some adjustments are there. We'll study the adjustments side by side. We'll analyze the trial balance also. Let me take off adjustment number 2. Insurance repaid on 31st March 2020 to 50. This is to be deducted from insurance. Look at the item here. You've got insurance here, 800 rupees. From that, you have to deduct the amount given here, 250. 250 should be deducted from 800 because that is relating to next year. Though it is paid this year, it's relating to next year. One thing. Secondly, look here. Insurance prepaid at the beginning of the year. That means last year insurance was prepaid. That means that is the expense of this year. Therefore, 200 should be deducted. 200 rupees should be deducted to the insurance amount. That is 800. So 1000. Therefore, you have to deduct what's given in the adjustment at the end of the current year. So since it is relating to next year, it should be deducted. Alright, next. General expenses include 300 on carriage on furniture purchased. General expenses are 1000. So of that 300 is for carriage on furniture purchased. That is not for goods purchased. Therefore, it cannot be included in the general expenses. That should be added to furniture. So actually entry is furniture account to either cash or bank account. General expenses include 300 for carriage on furniture purchase. So it should be added to furniture and it should be deducted from general expenses. So it is included in general expenses, therefore it should be deducted and it should be added to furniture. Then a fire occurred in the godown on 5th January 2020 and stock of the value of rupees 10,000 was destroyed. Insurance claim admitted by the insurance company amounted to rupees 7,000. It's very simple. Total cost of the goods destroyed should be credited to trading account. So trading account credit side by goods destroyed by fire 10,000. Then 7,000 due by insurance company which is admitted by them should be taken as an asset. And the asset side you have to write amount due by insurance company 7,000. Total loss is 10,000. Amount admitted by insurance company 7,000. If that is the case, net loss is 3,000. It should be debited to profit and loss account. Then private purchases of proprietor amounting to rupees 300 was passed through the purchase account. So private purchase means it is not meant for business. Therefore, it should be deducted from purchases 300 and it is taken as drawings. And the drawings you have to add and deduct from capital. Bills receivable include dishonored promissory note 500. Promissory note is treated as good as bills receivable only. When promissory notes are received, the entry will be bills receivable account debtor to sundry debtors. Now you have to reverse it. That is sundry debtors account debtor to bills receivable. In other words, that should be deducted from bills receivable on the asset side of the balance sheet and added to sundry debtors on the asset side of the balance sheet. Let me repeat. Deducted from bills receivable and added to sundry debtors both on the asset side of the balance sheet. A check of rupees 1,000 is dishonored on 20th March 2020 is not recorded in the books of account. Even here, when you receive a check, bank account debtor to sundry debtors. Now reverse entry, sundry debtors account debtor to bank. In other words, deduct 1,000 rupees from sundry debtors and should be added to sundry debtors. Deduct 1,000 rupees from bank and add 1,000 rupees to sundry debtors. Debtors include rupees 1,500 due from the proprietor. Therefore, it cannot be included in sundry debtors, so it should be deducted from debtors on the asset side of the balance sheet. Secondly, it is taken as drawings, so it should be added to drawings and deducted from capital on the liabilities side of the balance sheet. Closing stock is valued at rupees 30,000, so it should be credited to trading account as well as it appears on the asset side of the balance sheet. Come to the first point, write off rupees 1,000 from debtors. So if you look at the trial balance, you have got bad debts of 800. So bad debts are already given. If that is the case, the balance of sundry debtors is after deducting that. Then you have to add 1,000 rupees given the adjustment as bad debts, further bad debts. So bad debts given in the trial balance, and bad debts given in the adjustment, add new provision for doubtful debts. So 5% should be calculated on the sundry debtors. I'll show the calculation a little later. So provision for doubtful debts on sundry debtors should be added from the total, that is bad debts given the trial balance, bad debts given the adjustment, plus new provision for doubtful debts. From the total, you have to deduct old provision for doubtful debts. Old provision for doubtful debt is 1,200. So that should be deducted. The remaining amount is to be debited to profit and loss account. And here is one more item, bad debts recovered. That's an income that should be credited to profit and loss account. And regarding the bad debts given the adjustment and the provision for bad debts, both are to be deducted from sundry debtors on the asset side of the balance sheet. Before calculating the balance of sundry debtors, what you have to do is you have to take the sundry debtors given the trial balance, that is 33,000, and all of the adjustments should be made, and then you have to deduct bad debts given in the adjustments. And then on the remaining amount, you have to calculate 5% sundry debtors. Provision for doubtful debts on sundry debtors. Okay, now look at the items on debit side. So capital will appear on the liabilities side of the balance sheet. So that of course adjustments are made. Drawings are deducted therefrom. Plant and machinery is an asset. Insurance prepaid is added to insurance because that's relating to this year but paid in advance last year. So it should be added. Whereas prepaid insurance at the end of the year should be deducted back up because that is not the income of current year. This is opening stock, should be debited to trading account. Furniture, an asset, fixed asset, comes to the asset side of the balance sheet. Insurance, debit side of profit and loss account. To that you have to adjust prepaid insurance at the beginning as well as at the end. Purchases will appear on the debit side of trading account. To that you have to make certain adjustments. Sales will appear on the credit side of trading account. Purchases debit side, sales credit side. Returns. So 370 is the purchases returns and 260 is the sales return. Logic is simple. If purchases are debit, purchase returns are credit. If sales are credit, sales returns are debit. So this is the simple logic. Bills receivable and bills payable. 12,500 is bills receivable and 6,200 is bills payable. Of course, adjustment has to be made to bills receivable. When carriage on purchases, it is direct expense debited to profit and loss. Sorry, trading account. Carriage on sales, it is indirect expense, so it should be debited to profit and loss. Then wages should be debited to trading account. Salaries debited to profit and loss account. Debtors are 33,000, creditors are 47,000. Debtors will appear on the asset side, creditors will appear on the liability side. Of course, adjustments are to be made to sundry debtors. Bad debts, it will appear in the trading account. Provision for bad debts. So it is like this: bad debts given the trial balance, add new bad debts given the adjustment, add new provision for doubtful debts given the adjustment. From the total, you have to deduct provision for bad debts in the profit and loss account. Remaining amount should be debited to profit and loss. Discount, both debit and credit are there. Debit is discount allowed, debited to profit and loss account. Credit is an income, should be credited to profit and loss account. Cash at bank, an asset, cash in hand an asset, bad debts recovered should be credited to profit and loss account, rent paid is an expense debited to profit and loss account, general expenses should be debited to profit and loss account, but adjustment has to be made to that. Depreciation on machinery, it is to be treated only in the profit and loss account, it is not to be deducted in the balance sheet. So also depreciation of furniture should be debited to profit and loss account and it should not be deducted from furniture. This is because both machinery value and furniture value which you find here, they are after deducting the depreciation. See, plant and machinery here. Similarly, furniture here. So these values you find here against them, these are the values after deducting depreciation. Depreciation should be treated only once if it appears in the trial balance, that is the profit and loss account. Okay, I have explained everything. Now let's look at the trading and profit and loss account and balance sheet which is prepared. Opening stock and purchases, therefore we have to deduct purchase returns, then private purchases should be deducted. So 85,650. Carriage on purchases, it is direct expense, should be taken here. Wages also should be taken here. Trade side, sales plus sales returns. Then goods destroyed by fire, total value 10,000. Closing stock is 30,000. So if you balance, the balance is 35,468. That's nothing but gross profit, but transferred to profit and loss account. So it is written here. Profit and loss account is created by trading account 35,468. Discount credit balance 240. It is discount received or earned. Bad debts recovered 300. Debit side to insurance 800. Insurance prepaid at the beginning of the year 200. It should be added because though it is prepaid last year, it is relating current year added. And then prepaid at the end of the current year, it is relating to next year, so it should be deducted. Carriage on sales 625. Salaries you have to take. Bad debts given the trial balance. Add bad debts given the adjustment. I forgot to written it within the bracket. So bad debts given the adjustment 1000. The new provision for doubtful debt separate note is given. It is 1600. So together 3400. Minus old reserve for old reserve and provision both are used simultaneously. Alternatively. So both are both can be used for the same thing, either reserve or provision, but more appropriate is to make use of provision rather than reserve. So old reserve for doubtful debts 1200. So 2200 is the net value. The formula here is bad debts, total bad debts, add new reserve or provision for doubtful debts minus old reserve for doubtful debts. That is the formula. If old reserve is more than the total of these, then it will come to the credit side. Goods destroyed by fire, net value here. Net value, that is subject to correction here. It should be, just a minute, yes, correct. 10,000 minus 7,000, so 3,000 should be taken as goods destroyed by fire. I have shown it in the working note. Rent paid, an expense. General expenses 1,000, that includes carriage and furniture purchase. That is not to be taken as revenue expenditure, rather it is to be taken as capital expenditure. Should be added to furniture on the asset side of the balance sheet. 700 is the net value. Discount 450. Depreciation on machinery. Depreciation on it should be furniture here. It is not machinery. This should be furniture 1,000 rupees. It is shown here, but rather it appears here. Just see here. Depreciation on furniture. It should be 1,000. So it is improperly typed. So it should be depreciation on furniture. So if you find the difference is nothing but net profit. It is transferred to capital. We come to the balance sheet. Assets at cash in hand 290. Cash at bank here. Check dishonored is deducted. Therefore 4,250. Insurance prepaid It's an asset. It is for the next year. Actually, you have paid this year, but for the next year. So that is not the expense of this year. Amount due by insurance company 7,000 out of 10,000. Closing stock 30,000. Bills receivable minus promissory note, which is included in bills receivable, dishonored 500. Should be deducted. Debtors 33,000. Rather add two items. One is check dishonored, the other one is bills dishonored. Both are to be added. An amount due by the proprietor, that should be again deducted. 33,000. Therefrom deduct bad debts given in the adjustment, not in the trial balance. Then provision for bad and doubtful debts 5% on debtors. 32,000 into 5%, that comes to 1,600. So 30,400. The next, furniture 15,000. Add carriage. Actually, it is included in general expenses. That's wrong because this is a capital expenditure connected to furniture, so it should be added to furniture account rather than debiting it to the general expenses. Plant and machinery 60,000. Okay. Furniture is already taken. Furniture. Okay. Now come to the liability side. Bills payable 6,250. Creditors 47,000. Capital 98,407. Net profit, which you find here, 12,683. Total is unlike 11,090. Less drawings. So 2-3 items are to be taken here. Drawings, and then private purchases, and then amount due by proprietor. So all these are to be added. So amount due by proprietor, 1,500. Then 300, that is purchases, private purchases, 300, this one, and then the drawings as it appears in the trial balance. So all the 3 items should be added. So 4,800 total drawings, that should be deducted from previous value. So net capital after all adjustment is 1,06,290. The total of the balance sheet, if you can check, that comes to 1,59,490. Let us look at some calculations here. Working notes. Calculation of provision for doubtful debts. Sundry debtors as per trial balance is 33,000. Checks dishonored. I told you when you receive the check, bills receivable account entered and sundry debtors account is credited. But if it is dishonored, reverse entry, sundry debtors account to bank account. So therefore, it is added to sundry debtors. So also bills, promissory note dishonored. It is taken as bills. When you receive the bill, bills receivable account to sundry debtors. Reverse entry, sundry debtors account to bills receivable. Due from the proprietor. So that is not, that cannot be taken as a amount due by debtors. So it should be deducted. Then bad debts given in the adjustment should be deducted. On the remaining value, 32,000, you have to calculate 5% provision, comes to 1,600. Alright, next, promissory note dishonored, which is included in bills receivable, should be deducted from bills receivable and added to sundry debtors on the asset side of the balance sheet. I explained it already. Check dishonored not recorded in the books of account should be deducted from bank balance and added to sundry debtors on the asset side of the balance sheet. Debt due by proprietor included in sundry debtors should be deducted from sundry debtors on the asset side of the balance sheet and added to drawings on the liability side of the balance sheet. Carriage and furniture purchased included in general expenses should be deducted from general expenses in the profit and loss account and added to furniture account on the asset side of the balance sheet because it is a capital expenditure. Private purchases included in purchases should be deducted from purchases in the trading account and to be taken as drawings and deducted from capital in the balance sheet. Total value of goods destroyed by fire should be credited to trading account. That's 10,000. The net loss should be debited to profit and loss account, 3,000. Claims admitted by the insurance company should be shown on the asset side of the balance sheet. Bad debts given in the trial balance should be treated only once in the profit and loss account. And bad debts given, the adjustment should be treated twice. Once in the form of addition to the bad debts given in the trial balance in the profit and loss account, and a gain should be deducted from sundry debtors in the balance sheet. That is asset side of the balance sheet. So thank you very much.